Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. And stocks down after a gap up. This scenario, my bad. I should have talked to you about this potential scenario. And that is when we are very stretched, as we have been on a daily time frame, and we see a big gap up or any gap up really in the markets. Always have to be cautious of a instant gap fill or a drop in the markets. It's very common. It's what we saw today. Everything really was on the way back down, though. Everything that was support held very well as support, as you see here on the 60-minute. Now, the blue line still holding just fine on the Dow. NASDAQ a little bit weaker than the rest. Well, all right, considerably weaker than the rest today. And that making sense, and once we get there, I'll point out to you why. But you see on the Dow, it probably held up the best today out of all of them. And you can see why. Coming down, holding on to the blue line, and close to this 20 period moving average, not hitting any of those lower levels that we had mentioned though in this weekend's video. Big gap up and a straight run down all day though does not give us bullish intent. Not right now. We need another confirmation day to really tell us whether or not this was a move for real. But you can see, and this is what I was pointing to, remember these 50-day moving averages? The one caveat I found in the weekend's videos was it just felt like everything wanted to be pulled to the 50-day, but then the NASDAQ would have been up above the 50-day in that case. So what we did see today were moves towards the 50-day moving averages in all of the indices. And holds today, especially a very, very strong hold. This is why I tell you to keep these levels in your charts. Why? Because of situations like this. Big gap up today right to the 50-day. And a run down the rest of the day, coming back into, as we saw in the 60-minute, very logical support. Now, putting in another potential reversal candle, still not confirmed yet, and we did not get any kind of a test of the 200 on the Dow. These are still the bigger levels to be watching, and that are the 200-day moving averages on every one of the indices. Breaks below those, then maybe we're in for, I'm going to call it a pullback at this point. I'm not going to go out on a limb and say it's the next big wave down that's going to break these levels. I'm going to look at it and just approach it right now as a simple pullback, and then we'll see if we can break these bigger levels of lower support down here, and maybe we have something bigger on our hands. So I'm not going to get ahead of myself at this point. I will say, though, that after today's action, none of it, of course, being very bullish from the standpoint of gap up and run right back down again. Just nothing but selling pressure coming in almost the entire day. NASDAQ on a 60-minute, it did break the blue line that we had here, holding nicely for the time being until today with the big gap up and then the run down. But right back into the 50-period moving average where it saw its bounce. The break was below the 1890 area to be watching. We only made it about 2.5 points below before we finally saw a retreat back to the upside. From a daily standpoint, this was big right here. Look at the big gap up and over the 50, only to come screaming, literally screaming back down below. Almost down 1% today. Whereas the S&P was only down 0.4%, and the Dow basically unchanged at only down 8 points on the entire day. So the NASDAQ really showing the weakness today out of all of the indices. Continue to watch this. What is this? What is this? Yeah, kind of looks like one of those bearish engulfings, doesn't it? Yeah. So there is the potential for another move to the downside tomorrow. Only confirmed if and when we finally do really break below that 1890 level again and head our way down. If it bounces back up, continue to watch this 50-day. That has been very, very strong, and you can see that the selling pressure up here was pretty great once we got up into this area here. From a weekly standpoint, it is Monday. We'll watch this closely. That can change very rapidly before the end of the week. Here's the S&P also holding the blue line, coming down, retesting the 50-period moving average as we saw on the NDX. And from a daily standpoint, holding the 200. still the line to watch. No question about it. Still the line to watch right here. The 200-day moving average. That is down now at about the 1110 area. About the same as where we were yesterday. Watching for breaks below there. And 1100 is going to be also very strong support. Those are the two levels to watch on any further weakness. However, this is also a bearish engulfing pattern. So we do have the potential for a reversal to be put into play. Now, we've seen candles like this in the past. And if we do not get confirmation and cannot get back below this 200, we're still going to end up putting ourselves into what will be considered a high base formation, which is overall bullish. Watching for confirmation tomorrow. Here we are on the weekly, already up to and testing the 20-week moving average at 1134. High was 1131. Very logical place to find a bounce today. And what did it do? It gapped right up to it before selling off the entire day. VIX on a daily, seeing a little bit of a bounce down here, up about 4% on the bounce itself. So still getting itself and keeping itself back above some of these moving averages down here. But you can see the gap down was where the VIX started to bounce. So we're really struggling with the support down here. Only time will tell tomorrow, I think, will give us a good idea of if these areas are actually going to hold as we go forward. Apple on a 60-minute also seeing the pain, gapping up to a new high, almost 280, and then running down the rest of the day. These still is a good opportunity to play this both up and down from an intraday standpoint. Lots of stocks today very easily tradable on an intraday chart based on their price action. Apple definitely being one of them. The big gap up and the run back down. I mentioned that up here can any point up here can be the end of 5. Is this it? I don't know. Maybe this is just the end of 1 of 5. It's still too early to tell. But keep in mind that we did also put in an engulfing pattern here. Engulfing, really, I'm going to call it 2 candles, which adds strength to the pattern itself. Looking for more confirmation on that tomorrow. So anything below about that 267.50 area, I think, gives you good opportunities for shorting Apple. From a weekly standpoint, look what it's doing, fighting with Big Blue. We knew this was going to happen. I said this was going to happen. A little early. Notice that we are back to the blue line right now, but a little early to be focusing too much on weekly charts. FAS on a 60-minute also gapping up above 200 and moving back down. So important that when we are watching for breaks of support and resistance, that we look for not gaps, but nice slow methodical runs up or slow methodical runs down through those areas. It certainly makes trading a lot easier. I do not mind trades like this where it gaps up, but I'm not trading it from the get-go. Our entry was above the 200. If I see a big gap up like this, I'm going to wait a while to see if it's actually going to hold. If it comes back and retests this area and then holds this area, okay, now maybe I have a reason to take it, in this case, long. But there was none of that going on. It gapped up, no trade for me at all on the big gap up today. It just bled to death all day long and didn't even really stop or really hang around too long at the 200 before breaking back down below all those moving averages. The daily standpoint showing the same thing. Up, 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 gap up, run down. That is not bullish behavior. Certainly not what the bulls want. If they can keep this thing sideways, though, the bulls still will remain in control. FAZ on a 60-minute, getting the big gap down, running up. So another situation where a gap down below 14 I'm not interested in. 1360, 1350-ish was my lower support based on a daily, if I'm not mistaken. And then it ran all the way up today. Didn't even stop. I would have expected it to maybe stop at the 14 mark, and it did not do that. So watch these carefully. This was still a good trade to the upside based on today's market action. Did nothing but go up all day long, making pretty easy trading on these. Our entry to the short position was below 14, but I'm not going to do it on a large gap like this. I'm just not. Now, if it comes up to 14 and it holds, okay, I might think about a short at that point. That isn't at all what we saw. Not conducive to good trading to the short side here. Here was the 1350, 1360 area we talked about, and that is the 50-day moving average. So moving back up, if this thing continues to the upside, look for the 15 mark to hold. That is this blue line, and ultimately maybe this 20-day moving average. Still not in a position to be trading these on a swing trading basis. They're best left to intraday trading, both FAS and FAZ. All right, so here we go. Looking for breaks of these levels. The blue line on the 60-minute here, the blue line on the 60-minute here. And from the NASDAQ's point of view, it's already starting to see a little bit of the pain as it breaks its blue line down into here. So for it, I'm really looking for pushes back below about 1890 if you want to get aggressive, below this 50 period moving average if you want to get aggressive on a short for the NASDAQ, otherwise below 1860 before we see any really new opportunities to get short on the NASDAQ. All right, be back with you guys again tomorrow night. Safe trading, and let's see if we get confirmation by the bears tomorrow. Bye.